Thanks for joining us. I'm Marlon Bowling with a look at our ag commodity trade. I am joined right now by Brian Hoops, and he is with Midwest Market Solutions out of Springfield, Missouri. I have to ask you right off the top, Brian, are you getting rain?
We are getting rain, and there's forecasts for more rain to come. So yeah, it's a lot of green here for this time of year, and for producers in the winter wheat belt, this is going to make a great seed bed to seed into when they start next month. And we've got prices that suggest that producers are going to try and really aggressively seed some wheat, and there's been quite a bit of hedging, anticipating that they want to get a good price established for their wheat crop.
I saw in the crop progress and condition ratings that came out yesterday afternoon from USDA, there was a tendency in the western corn belt for the corn and soybean ratings to generally decline, and then in the eastern corn belt there was a tendency for them to actually improve a little bit. Nationally, we had the number going down 1 point in the corn and soybeans. Now, I noticed where Nebraska's corn rating went down 2 points in the good to excellent category. Iowa stayed the same, and Missouri is right in the heart of that drought-affected area there. The rain that you're getting, is it going to be too late to do any good?
Oh, well, it depends on what crop you're looking at. Some of the soybeans that were double crop, they planted soybeans behind the winter wheat crop. This is perfect for them. They're really going to flourish and grow. If they were earlier planted soybeans or earlier planted corn, it's going to be too late. So it's going to vary depending upon when you planted it and what crop you're looking at. But for those double crop soybeans and for newly planted winter wheat, when they get the seed bed established, this is really ideal.
Now, that's an interesting angle. I haven't really heard that one yet, but maybe the very late beans this year may really benefit the most and be in the best shape. That's one of those unusual years. All right, let's look at our current trade in Chicago. We'll walk through everything for you, and let's take a look at corn right now. On the big board, we are still trading a little higher in corn. In fact, we're toward the upper end of the range today. September corn now 2 1/4 higher at 358 3/4, and December 2 1/2 higher at 373 per bushel. On the soybean trade today, we have soybeans now trading a dime higher on September. Look at that, 867 1/4. And now you have November now 10 higher at 878 3/4. Meanwhile, on the wheat trade, the wheat has been kind of a divergent market, with Chicago and Kansas City finding support today, but Minneapolis finding pressure. September Chicago wheat, well, it's now 4 higher at 537 1/2. And if we look at Kansas City wheat, we have the September contract now 2 1/2 higher at 543 1/4 per bushel. Meanwhile, in the Minneapolis market, where we've been talking about the very active spring wheat harvest pace, well ahead of schedule already, we have the September now trading 3 lower at 589 3/4. And on the cotton market, don't want to leave that out, where we have December now trading 36 points higher. A bit of a rebound today. We're now at 83.12 cents per pound. We'll bring Brian Hoops back here in just a moment, and we will talk about our cattle and hog market activity on a Tuesday when we come back after this. We're talking with Brian Hoops of Midwest Market Solutions in Springfield, Missouri. We're going to shift our focus a little bit and look more at the livestock sector here. Part of that involves our pasture conditions here, Brian. USDA updated those as well yesterday afternoon. Here is a look at the key plains area where a lot of cattle production takes place. And it's significant here, where you note the Texas pasture conditions this time around. Yes, they are still 57% poor to very poor. The good to excellent rating is 12%. They actually came up 1 point. Not a big improvement, but they are 1 point higher than last week. Oklahoma at 38% good to excellent would be 6 points higher than what we had a week ago. And the Kansas pasture conditions were 31% good to excellent. That's up 2 points from the previous week. It is still 35% poor to very poor, though. Keep that in mind. And Nebraska, 77% good to excellent, actually picked up a point there as well. And South Dakota declined by 7 points last week to 49% good to excellent. They're now up to 16% poor to very poor in South Dakota. Thought that was a little bit telling there. Now, on the livestock market today, a lot of weakness here in the cattle complex here, Brian. Let's go ahead and take a look at our live cattle and feeder cattle futures for everyone. We have October live cattle turning around, and since our last update, they were lower and now we're 60 higher at 108.75. So now they're at 108.80, gaining and almost on the new high for the day. December live cattle at 112.60 would be 60 higher. So a turnaround here by about 90 cents on the live cattle trade from our early morning low. On the feeder cattle trade, here's a quick look at where we now stand. We are higher by 95 cents in the August contract. September is up 57 at 149.02. October 13 higher now at 149.08. So a definite turnaround in the cattle complex. What about lean hogs? They started out firmer today, and they still are. We have October 75 higher at 52.40 and December 60 higher at 49.18. So now it's like everybody on the bull train this morning here on the livestock trade. It took a while to come around here, Brian. What do you make of the action?
Well, I think a lot of this is based on technical chart patterns. The October cattle fell down to an uptrend line yesterday, and this morning we kind of went and probed that, and we did not take out yesterday's lows. We held the uptrend line, and so we're starting to see some short covering develop. And I think, the charts are starting to roll over. Feeder cattle, I'm very positive, have already, and the live cattle will soon follow. So I do think if we get a rally here into some retracement levels, get October back into that 110.50 to 111 area, going to represent some hedging opportunities, but there is some buying interest in today's market activity. We'll should see the gains led by October here going forward as cash trade. I don't think it's going to fall out of bed, and packers have plenty of margins here to work with. So I do look for cash to be pretty steady this week.
I did see where the plant-delivered hogs yesterday in the Western Corn Belt were down $1.54, so they had a significant decline again. The beef cutout values, though, I did want to touch on those, and we will get new updated numbers here in about a half an hour from right now. But boy, they had some big increases yesterday with choice cuts actually gaining $1.82 yesterday afternoon, and selects were up $1.89. The pork product values were on average a little bit weaker yesterday. Brian, thanks for the time. I appreciate it. Good day trading out there. Brian Hoops of Midwest Market Solutions in Springfield, Missouri.